As I mentioned earlier, one factor that might help us confirm whether to follow a candlestick pattern or not is volume. Volume tells us how many contracts or shares changed hands on a particular day, and it's therefore a good indicator of where the demand is. For example, if we have a strong up day but on weak volume, we might assume that the up move has less importance than if it was accompanied by strong volume, and vice versa. In this way, volume acts as a confirmation because it gives us key information about the driving forces behind a particular move. So now I'm going to put this theory to the test using the bullish engulfing pattern as an example. And I think the bullish engulfing pattern is a good choice here because it's a pattern that is based around this concept of bulls overpowering bears. So in theory, we would like to see the bullish engulfing second candle having stronger volume than the first candle. That seems like a logical thing to expect with this pattern. In our previous test, the bullish engulfing pattern produced a lot of signals, but it wasn't particularly profitable. So now let's see what happens if we buy a bullish engulfing pattern, but only if volume on the second candle is stronger than volume on the first candle. So to do this, I've simply used AMI Broker again, just like before, and this time I've included an extra rule which says we will buy the candle on the close of a bullish engulfing candle, but only if the volume is higher than the day before. So a pretty simple adjustment that's not too hard to program. And here's an example of what we're looking for in Altria. You can see here that we had a bullish engulfing pattern which is accompanied by much stronger volume, and that led to a continued up move. But also remember, this is a cherry-picked result, so let's take a look at how effective this rule really is. And here we have the original results on S&P 100 stocks where we had no volume rule. As you can see, the one-day holding period produced an average profit of 0.09% with a win rate of 50%. This is from buying the bullish engulfing pattern on the close and holding for one day, while the 10-day holding period saw the best result with an average profit of 0.35%. And now we can see what happens when we introduce the additional volume rule. So here you can see that introducing the rule has improved results ever so slightly. The number of trades has dropped as expected, but our average profit has gone up, and it's either gone up or stayed the same for every holding period as well. Buying a bullish engulfing pattern when volume is higher than the previous day than holding the trade for 10 days was the best result, with an average profit of 0.42% per trade and a win rate of 54%. So it does seem that there is some merit in combining volume with your candlestick decisions, particularly with the bullish engulfing pattern as we've shown here.